Hi, it's Steve and Joe from Freshagenda, and it's been a while, Steve. Our movie producer has been touring South America, so I don't think we've done one of these little videos since late last year.
No.
So I'm sure our 30 fans will be missing us.
Yeah, they'll be hanging out for this.
Yeah.
That's right.
Yeah. So it's actually been a fairly busy start to 2018. We've put out a number of outlooks for commodity milk value, and now we've just updated our farmgate milk price outlook based on those commodity milk values for Australia. It's moved around a bit, hasn't it?
Yeah, I guess it's reflecting, we've seen since really the third quarter last year, there's a lot of volatility in Europe. There's a long-going story about the changes in policy affecting skim milk powder and how that impacts on butter, and the guessing game about where their milk growth, how much milk growth is going to come out of that system in spring, which we're just starting into. So that's kept the market in a bit of the dark about where, in particular about butter, where that settles and what's the value of butterfat going to do. Prices spiked late last year and
they
come
quickly
off.
Slid, didn't they? Because people were expecting a lot more milk to come from the European springs.
Yeah, and initially there were some very negative demand signals.
Yep.
Pushing back against high prices late last year, which then got the market quite spooked. And so with the onrush of milk, prices fell. And then we've seen a turnaround, and quite a sharp, quick turnaround that the market settled at a higher value.
And it seems like there's sort of a demand and a supply side to that kind of resettling. The demand signals are much more positive, it seems, out of Europe. Like those supplies have gone into retail stores and been pulled through at quite reasonable prices for butter.
Yeah.
But also, I suppose, a bit of cold weather has got people thinking that the European spring might not quite be as strong as we'd originally thought.
And that would make it 3 years in a row where spring has struggled, where it's failed. So we've just seen overnight some fresh data out of Europe which shows that milk growth has stopped. That is probably going to be a short-term thing, but that'll help just slow down the milk growth.
So long story short, really, we've moved our commodity milk value forecast for the 2018-19 season up 50 cents a kilogram milk solids in just the last few months. So, but it's still going to be volatile, isn't it? Possibly.
Yeah. As we're seeing a chart now, as we see our commodity milk value forecast slide as we go through the effects of all that milk in Europe. And then rise again as we get through to the end of the calendar year and into the early part of next year. So, but we're projecting there the season average, the Australian season average, and that's an average for the milk pool, which is based on the average product mix.
Yep.
How essentially that's half cheddar or half cheese, and the rest into most of the rest is into skim milk powder and butter, and a little bit into whole milk powder. The result will be different for companies with different product mix.
That's right.
And different exposures, so that's important to note. And naturally, if you've got fresh milk players, they buy well above the manufactured value of milk, so that's a different equation again. So people will see all sorts of numbers. It's best to get in context what the projection we're putting out refers to. It's an average for the milk pool.
And historically, it's accounted for maybe 80% of the final farmgate price figure on average, but that's moved around anywhere from 75 to 90% over the years, hasn't it? Over the last 7 years. So it is important to understand exactly what it is it's the underlying price. It's not an attempt to estimate everybody's final price.
No, not at all. The other thing that's changed and gone a bit better for the outlook is a bit better is for that value add component or that value capture above that. Now it's clear that there's a vote out in front of MG owners, but ultimately what it means is there's less players in that retail food service sector, less suppliers, so there'd be less competitive tension, particularly around cheese, which is important. And talking around the industry, there's a sense, both sides of the equation at wholesale, that values should show more reflective, flow through. So we've lifted that value add component. It isn't back to where it was a few years ago, but it will start to make it'll make a bit of a difference.
Yeah, that cheese market is been very keenly contested in the last few years,
and price has been eroded as a result.
So I suppose the other factor, and it probably feels quite remote for farmers here in Australia, but EU butter is going to continue to be an important determinant of what happens for commodity prices and then therefore prices back here.
Yeah.
So we've got a bit of a chart up now just to explain those linkages that kind of fan out from EU butter. Do you want to just talk us through that?
Yeah, so really I think the key value driver that we see at the moment is the skim milk powder butter combination, that product mix, which is a fairly large part of the milk use, not predominant in Europe. The value of milk out of that is impacting the value of cheese, and that in the European sense is the key market. Cheese markets have firmed a bit given the lift in the milk value out of skim and butter, and as we see, that ripples around the world. So the European cheese values directly impact the export alternative for New Zealand. A lot of competition in certain markets, so that affects the cheddar prices in New Zealand and directly into this market. So on the other side of that equation, if you flow the impact of the intervention policy in Europe, which is keeping a strong cap on where skim milk powder prices are going to go, that impacts what's available out of this part of the world, so New Zealand skim milk powder. There is, however, a healthy premium for fresh product. Firstly, a fresh product premium, then it seems to be an Oceania premium. So whether that's
sustainable,
but there is downward pressure on skim milk powder with the amount of product that's now starting to move out of intervention very slowly. Then you come across the whole milk powder, which is almost a side story now. As we've measured, it's about, in terms of the major exports, only about 9% of milk solids goes into whole milk powder. So it's a small part of the global market, critical for the Kiwi farmers. So again, that's being weighed down. It's the dead weight on that is what's going to happen to skim milk powder and how that impacts the substitution into full fat product.
That's right. So fat-filled milk powders gaining a real foothold over the last 12 months or so, and that divide between whole milk powder and skim milk powder values is very large at the moment.
Yeah, for the lower price parts of the world market, that's become compelling, and we've seen fairly stunning growth in fat-filled exports into those regions because of the price difference.
So that's really what's capping whole milk powder values more than what's happening with the New Zealand production, especially in the short term in such a, the seasonal low.
Yeah.
The other interesting little side bit here is about some of the, and people say some of this intervention products might be getting a bit old, but if it's going into the feed market, it's also having an impact on cheese.
Cheese returns.
Cheese returns, So displacing whey from that feed market means that the total returns from cheese production are also affected. So that then again affects those product mix decisions in Europe. So it's a fairly complex picture that we're tracking.
Yeah, it is. And it's I guess for the next 6 months, the key thing to watch is not so much about what happens in New Zealand. It is about how much milk Europe produces, how they use that, what that's going to do to the fat market. We think prices will weaken slightly as we go through their peak, but not to the extent that was feared by the market earlier. As to that, the great correction that might have come with a lot more milk growth. So
that's right. So
it's looking a bit kinder.
It is a bit brighter than when we were looking out in January. If we'd done one of these in January, it would have been much more miserable. That probably wraps it up from us this time round, Steve, does it?
I think they're the big issues. I think we've got the video production back on track. We'll see how this comes out, but we'll see you again shortly.